Hello all, welcome to the next episode of Loan Syndication Reconciliation. Today we'll discuss about the third most important point is capital commitment. So what is capital commitment, how is relate to the loan syndication, how we can resolve the break, how broker, custodian and the other party will reflect the pricing letter, will discuss in this session. So we'll start with the meaning. So capital commitment is a money that investor promise to contribute to the investment firm. So it is a direct, we can say that whatever the agreement has been done between the borrower and the lender, the same they have to follow through capital commitment term. So why I am telling this term will discuss in the later part of this session. So it is often associated with the alternative investments such as VC and PC like venture capital and private equity, which require committed capital due to illiquid nature. Committed capital is typically used for fund investment as well as administration costs. So most of the often this is used for this two term. Again, we'll go with the definition. The total amount of capital an investor agreed to provide private equity firm over the life of an investment. So it is just part of the whatever the amount agreed. So if we take example, if they agree with a $10,000 or dollar amount, so it will be for example it will divide into the part of 10, so 1,000 each. So when 1,000 lender gives to the borrower as they mention in the loan agreement, so 1,000 going to the lender, so is go with the term of a capital commitment. So this is called capital commitment. So investor obligation is this: investor limited partner commit to provide capital to that general partner can call up when needed for the investment opportunity. So what is general partner and limited partner play a role here? We will just discuss in just short way. So there are two partner when they go into loan syndication. So one is limited partner, one is general partner. So limited partner is who? Is like IPO. For example, if you invest into IPO, so there are limited we can say various audience are there who invest into IPO. But in general partner is something like a promoter, like they have a small stake in the company, but each stake is very large. And for limited partner the stake is very low but the audience is very high. So like this is a concept. So key feature of a capital commitment is commitment and contribution. Commitment is total pledge amount, means whatever the amount they have decide in their loan agreement, so they still pledge with that, so they have to pay. Contribution is something the actual capital paid in which called up by the GP. So whatever the, like for example we'll continue the 10,000 example. If out of 10,000 5,000 is paid, so 5,000 is a commitment and 5,000 is a contribution and 5,000 remaining is a commitment. So we have given the detailed example downside, we'll discuss this. So drawdown capital fund are drawdown as a GP identify investment opportunity. So when GP is there, GP is a person who manage the fund, who is responsible for the operations of the fund. So the GP has limited liability because they are responsibility for all the debts and obligation. If fund not perform well, so they are the main limited with the limited liability. So actively manager our fund investment and provide a small percentage of capital as we discuss, and earn management fee and carried interest as well. So they are the managing the whole the fund, like they are the administrative who manage the fund, so they charge the management fee as well and carried interest as well. So duration of this is last, we can see the 5 to 10 years for the fund, depending upon the structure. What is the structure they have depend, like if project is very long, the amount is very high, so the it will take a time to release, or it will take time to repayment as well. So there are types of capital commitment. Is funded, unfunded. The investor commit a specific amount, but funds are drawn as needed. The common in private equity, venture, and real estate. So unfunded is something we can say that the investor commit a specific amount, but funds are drawn as needed. So whatever the amount investor asks, the the lender has given to the borrower, but they have not utilized that. So this is a term. The funded is something investor deposits a full commitment amount upfront and less common as required immediate liquidity. So it opposite of unfunded. So next, move to the benefit of this capital commitment. Alignment of ensure investor are aligned with the GP to investment strategy. So here the GP is taking care of all the investment strategy, where they have to invest and what time they have to invest, and if amount is released from the lender to borrowers, how it can be allocated to different sectors so fund can grow, because GP is charging management fee and administration charge as well. So it gives the flexibility as well. Investor can commit a large amount but invest incrementally on capital is called. So they have some flexibility as well. So invest in some particular investment with a large amount as well, and they can do incremental as well, like they invest in some investment like 1000 crore for example, so they can do in the incremental way as well. They have no limitations. Same the return potential. So return potential is very high, because the GP also play the role of here the fund manager also. So who is giving the money, and the same person is handling the fund, so he will handle with the care, because he with management fee he also get a carried interest. So carried interest is a part of waterfall, where the fund get redeem or fund get we can say at the last stage, and the profit has to be distribute to the investor. So GP will get the carried interest after the all the allocation to investors. GP get carried interest if they perform well, so they get a good amount of carried interest. So diversification also there. Investor is to diversify in multiple asset and sector within the fund, so they have many multiple option as well. So now the most important, will go with the example. So we have taken some more examples, so we can relate this capital commitment in the very easy and very short manner. Okay, so real example of this capital commitment, there is one private equity firm. So fund size is $100 million. Investor A commit 20 million, and drawdown will be scheduled like this. So year 1, year 2, year 3, the total you can check is going to match 20 million, and total contribution is 20 million. So what we have discussed, total contribution is 20 million, and is called as a full commitment. Means investor A commit that I will give 20 million. After giving his contribution year 1, year 2 is a contribution, we call it as a contribution, but after the 20 million get from there, so it's called as a full commitment. So this is a just short example of explanation of contribution and commitment. So we'll move to the next example, investor commitment versus contribution. Like same example we replicate here as well. Investor A commit 20 million capital, 5 million, 8 million, this million. So now the key point is here, the investor A only invest in capital is called maintaining the liquidity until needed. So he is maintaining the liquidity as per his obligation, because he said that I will give the 20 million, so he is meeting his obligation. So consideration of investor. So what will be considered as a part of a investor? So this is a liquidity risk. Fund are called over, requiring the investor to prepare the liquid asset. Investment horizon. Private equity investment are long term, often for this to risk. We have discussed in this above also. The capital call schedule. We aware of the projected timing for the call and the impact of a cash flow as well. If the timing will be, if they promise to give this quarter, if they not able to do, so the investor who want the money, the borrower actually may get some cash flow issue in his part as well. So we'll move to the conclusion and then we see the many example we have drafted. So capital commitment is essential part of private equity and providing structure and flexibility. Investor benefit for potential return while maintaining control over the capital deployment. Understanding the type of a benefit and commitment helps investor to manage risk aligned with the fund goal. So this is a just short summary that we have designed. If you preparing for any interviews or something, this will help to elaborate a interviewer in your interview. So we'll move to the example. So loan facility is $20 million. Senior secured fund names is there. Borrower is ABC. The lead arranger is XYZ Bank, and capital will be breakdown 50, 30, 120. So capital call will be scheduled first year 100 million, second year 100 million. So they commit the agent bank is here, lead bank is XYZ Bank. So that XYZ Bank reach to the investor A, investor B, investor C, and through we can say the loan syndication part, and this investor A, B, C is called a co-arranger bank, and XYZ Bank is play the role of a agent bank, and they schedule as per agreement that the first year they will give 100 million and second year they will give 100 million. So this is a just short summary of this. Now we move to the example. Okay, just we take an example detail of loan syndication. Okay, so the borrower is Green Tech company is a second example. Okay, we go with the first different example. This is a new example. So here the borrower is a Green Tech Limited. The total loan amount is 600 crores. Lender is XYZ bank, and the lead bank is X here, and purpose of this is wind energy project. So while they want to raise, a Green Tech want to raise a amount, so he also need to show the purposes of this. So purposes may be if the company is in the infrastructure sector, so he may be construct airport, maybe he in the rail, metro, roads, or anything like a bridge also. But if is a company of manufacturing, is a company of medicine something, if medicine they will need a money for the research and development. If there is a manufacturing, they want to increase their plant, they want to enhance their plant, so they require. So here the main purpose is wind energy purpose. If the Green Tech goes to the bank, so they have to mention their purposes, and then the bank will read if this project will get successful or not, and then they will release the fund. They will not release at a one go, because the amount of this is very large. Okay, the 600 crore we have taken the small example, but it may be in the million and billion and something 0000 also. Okay, so here we go with the example of wind energy project they want to launch. So here we divide this all the things into some different parts, so we can understand a better way. So here lender XYZ is there. So commitment percentage is 0.5, 0.3, 0. Means the X bank will give 50%, Y bank will give the 30%, and Z bank will give the 20%. So 600 if we divide as per percentage, the amount will be there. The capital call schedule SB. So now they want to do the capital call. So they the Green Tech also mention how they will do the project. So we have taken 3 steps here. Okay. So first is land acquisition, turbine installation, and project completion. So how they will give? The first call will be on 01/02/24 for the land acquisition of 150 crore. So the borrower mentioned that we required this amount at this time for this reason. So they have to mention in their loan agreement as well. So here they mention that for land acquisition they need a 150 crore, and for turbine installation 200 crore, and project completion is 250 crore. So like this the capital call is scheduled. So the breakdown of this capital crore of first 150 crore, how will they do? So X bank promise 50%, Y bank promise 30%, and Z bank promise 20%. So 150 crore will be divided like this. Again 150 divided into the share percentage. On the 01/02/24, the XYZ will give their commitment amount, capital call amount, or drawdown amount to the borrower. Borrower is Green Tech company. So hope you have this is just a small example, but if company is very large and they have many projects, so the purposes and the amount will go high. So this is a short example, so you can relate with your real life or something. If you are working in the reconciliation part, so you can relate. If you are working on the loan syndication, so you can directly relate with this example. Okay, so now my question is, we are discussing about the capital commitment, why there is a capital call name is coming, drawdown name is coming. Okay, so capital commitment, drawdown, and capital call are the same term. Same term means in the same, they are the three are the same only, but there is some little difference. Okay, same. Why I am saying the same? Because the capital call, drawdown, and capital commitment is same amount. Like if there is a borrower and lender, just take a hypothetical example where borrower and lender is there. If they schedule a payment for, we take example of 1 year. In 1 year, in 4 quarter, every quarter they want to release 1 lakh rupees. There is a 4 lakh requirement, so 1 lakh each quarter they will release. So when they release 1 lakh, that amount is called as capital commitment, drawdown, and capital call. Okay, so how it get differentiate, we'll see, because we have drafted at same level, because this is a complex way. Sometimes if you preparing for the interview, they will ask like this. Okay, so we'll discuss one by one. Okay, so definition of capital commitment, first go with this. We definitely understand with the definition, but we have maintained all the aspect as well. Okay, so first go with the definition. So capital commitment definition is total amount an investor agree to invest in the fund over the life cycle. So capital commitment is total amount what investor agree to give to the borrower. Capital call is request for the fund manager for portion of capital commitment capital. So again capital call is a part of capital commitment. Okay, and the actual process of transferring that capital to fund is called drawdown. So capital commitment is a big amount, then it go to capital call, then it go to drawdown. So let's take a hypothetical example. Okay, capital commitment is 10 lakh, a project needed 10 lakh. Okay, for example, the borrower the lender release for example, we take a 4 lakh example, continue. So in every quarter they required 1 lakh rupees. The total capital commitment is 4 lakh, capital call is 1 lakh. So 1 lakh when transferred to the lender, so it is called as capital call. And when lender invest into the fund means whichever is a fund account is there where they directly invest, so it's called as a drawdown. I think you clarify all three terms in this simple example. If you have any questions regarding this part, you can definitely comment us, we will explain again. So timing, we'll discuss the second part, timing. The fix at the beginning of the fund, issued periodically as needed, happen after the capital call is made. What I have explained, the same is written there. The first step will be the capital commitment, second capital call and drawdown. Purposes: define the maximum obligation of an investor, ensure the for capital call, ensure the fund has fund for the investment and operation, and transfer from to investor to fund. The same example will if you relate with the timing and purpose, you can clarify your doubt. Okay, the amount, the full pledge amount means 1 million. Here if we take 1 million is given, if you take here our 4 lakh example, so you can relate with this. I am just adding by giving dash. So if we take a 4 lakh example here, so it is better to understand at one go. So it is a 4 lakh and they have capital commitment, capital call of 1 lakh each. Okay, so 1 lakh here I will write, and this same 1 lakh is written here, sorry. So same 1 lakh is written here. Okay, 1 lakh, but is directly go to the fund. Fund means that account where the trading has been happened. I think you have in your, if you are working in any company, you are the experienced one, you heard about the master and feeder. The same account it will go. Okay, where they can directly trade into the fund what investment they need to buy. So example is again the same, he repeat here. So here the 4 lakh is there, here 1 lakh will come in the capital call and drawdown will become again 1 lakh. So this is our short summary on capital commitment. But in same video we have explained about the capital commitment, capital call and drawdown. If you like this video, please subscribe this and share as many as you, because going forward we will describe some interesting thing as well in the channel as well. We have some working on the some part, so hopefully you get more information about as well as loan syndication as well as other market as well, real estate, crypto, fund accounting, or maybe you get we are working on some other part as well. So if you don't subscribe this channel, you can subscribe, because whatever the videos we release, you can get a notification and you can learn. Okay, so thank you so much for watching this. We'll see in the next video. Thank you so much.